Welcome back to another video. In this video, I'm going to be talking about trends and market structure. Alright, so let me start by breaking down the three types of trends, right? So the trend is a general direction in which the market or the price of an asset is moving, right? So these are the three types of trends, right? We have bullish trend, which means the price is going up. We have the bearish trend, which means price is going down. And we have a sideways trend, which means price is just going sideways, right? It's not going anywhere. So let's start with the bullish trend. So bullish trend is formed by a low and a high, all right? And then after this high, price needs to pull back, collect some more buy orders for it to push the price higher. So with that, it creates a higher low. It's still a low, but it's higher than previous low, right? So this low is higher than this low, but it's still a low, right? Because we have this high. After this high low, what you expect is price to break this previous high and form a new high, creating a higher high. All right, so after this, you wait for the pullback again. Price should pull back to the same area as previous high and form a new higher low. All right, after the high low, market will keep doing its pattern and form new highs. All right, so this is the bullish trend when price is going up. The bearish trend when price is going down is made by the opposite. So you have a high and then price comes and forms a low, right? So after this low, price needs to push up, collect some sell orders, and make a new lower high. With this lower high, you expect price to break this previous low and form a new low, creating a new lower low. It's still a low, and it's a lower low than the previous low, right? So price again, following the same pattern, needs to come up, collect some sell orders, and make a new lower high, right? If you connect the dots, it will look like this. So from a high to a lower high, to a lower low, to a lower high, and so it goes. After this lower high, you expect price to break previous low, so previous lower low, and form a new low. All right, so this is how you categorize both of the uptrend and the downtrend, right? The sideways trend just means that price is literally going sideways. Price, let's just say this is gold. So gold is going from 2000 to 2100, coming back to 2000, 2100, coming back to 2000, and it's basically not going anywhere. So after this, you expect two things, right? Price to break above, make that pullback, collect some more buy orders, and then create a new high, right? So this is a high if you're going up, this is a low, and then you create a new higher high, right? Same thing for the downside. If I'm coming down, I break, I create a low, I make a new lower high, and then break that lower low over here and form a new low. All right, so this is basically the first thing that you need to understand when trading, right? Where is the market going? So right now, I'm going to give three examples in, I think, three different pairs, actually four different pairs about this trend and structure. All right, so you have a high here, right? So you have this high here. Let me correct this and make red, right? Because we are going down. So I have this high, and price pulls down, drops, and makes a low, right? Now after this low, what do you expect, right? So you went from a high to the low. Also, let me change this color. And then you expect now price to come and make a new lower high, right? So this is where it gets interesting. You have that low here, and then we make a lower high. Now from this lower high, you expect price to break this previous low and form a new low, right? So we did end up going a little bit shorter than previous low, but wasn't to the point where it broke literally all the way down. And I'll show you an example right over here. So after this lower low, right, so let's write it down. Price is expected to push up and collect some more sell orders to drive below this lower low, right? So we then form a new lower high, right, over here. After this lower high, again, following the same pattern, you need to create a new lower low. So price just comes and drops all the way down past both of these lows, right? Following this, price just keeps dropping down and creating, as you can see on this structure, price goes from a high to the low, lower high, lower low, lower high. We broke these two levels on the left, and then now structure starts to make new lower lows and lower highs over here, right? This is the best example that you have of a downtrend. Price is coming down, right? As you can see here, you have a new lower high after that lower low, and you are also retesting previous support here. So this is made up by a support, after that a resistance, and price just, let me change this. Let me move this sideways so you guys can see it's the same thing. Price comes, drops here, forms a level of support, pushes up, collects some more sell orders, breaks below previous low, pulls back to the same low that was previous support, forms a new resistance, and now just drops past that low, right? So there you have it. This is a first example. Now let's look for the second example. I have it somewhere over here. All right, so this is the second example of a downtrend. All right, you have the high formed over here, and then you have the low, the high, the low. You have a pullback, a push up actually. You have a push up over here, collected some sell orders, and broke below previous low, forming new lower lows. All right, so now price just comes and pushes up, goes to the same level of resistance on the left, and now you expect either price to break above or push down, right? So price then goes and makes a new low over here, almost at the same level of our previous low, and decides to go a bit sideways here, right, until we go and we break and we form another low over here, right? But as you can see, we are going on a downtrend. The market is going down, so price has to come up in order to come down again, right? So we make a new lower high. As you can see, we have a high, a lower high over here, a new lower high over here. Let me change the color. A new lower high, and then another lower high over here. Price did not break any of these levels for it to go bullish, right? So we make this lower high. What do you expect? You expect price now to break this previous low, and as it did, forming a new low here. All right, so that is the second example. Let's go to the another example, but this time we are going bullish. All right, so we have our low here. We start with the low, right? We go and we form a high. So we have the low and the high, and that is the beginning. So the low here, we form a high, and now you expect price to push down, collect some more buy orders, and break above previous high. So we break above previous high and we form a new high. Now same thing happens again. Let's wait for price to come down, maybe to the level of previous resistance here that you can see. That was the first high, and then we collect some buy orders and we go up, right? So we make a higher low here, as you can see, higher low, and then we start to break above and create new highs. So high, come over here, form a new higher low, we break above previous level of resistance, and the structure here is just insane. We form a new high over here. This is the new high. We touch our previous resistance on the left and previous higher high, and then we create a new higher low over here, right? So this time you keep going the same trend over here, making new higher highs and higher lows until price decides to break the previous structure and go the opposite way, right? So that is 3 examples for gold. Let's go now to the to US 30 Dow Jones. Again, you start with the high, you form a low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and you guys understand the point, right? This way you can trade with the trend. All right, now Bitcoin also, let me find it, maybe if we go higher, daily time frame. All right, so here are 3 examples, right? Again, low, high, higher low, higher high, higher low, higher high. This is it. You are going up. Now you have a high, formed a low, lower high, lower low. You are going down. High, low, lower high, lower low, lower high, lower low, lower high. You are going down. All right. So last example I'm gonna do with Tesla, right? As you can see, this is not just one pair. This is almost every pair that you can trade, right? So again, high, low. This is the daily time frame, so it's more for a swing trade and long-term investment. We make a new lower high, lower low from here, lower high. What do you expect now? Price to break previous low and form a new low. New low is formed, price reversed. All right. Last example I'll show you guys. Now we're going bullish, low to the high, higher low, higher high, higher low. We kind of go sideways over here. We broke past this previous high over here, this level of consolidation, and then we form a new high, right? So this is it for market structure and trend. All right, let me delete all of this. So this is it for the market structure and the trend. If you guys like this video, make sure to click the like button and the subscribe button, and I'll catch you guys on the next video, which is support and resistance. All right, thank you for watching.